Hey guys, Gregory Joseph here. Welcome back to Wall Street Weatherman, and I'm excited to talk to you today about some thoughts on the analysts, the stock analysts, but first, really quickly, let me talk about the last video and just add one other thing. We talked about cash, we talked about brokerages that will offer you a interest return on your free cash that is also instantly available to trade on. What I forgot to mention is those brokerages such as Robinhood that I have my trading part of my trading portfolio in, and this is not a paid endorsement, but they take your cash sweep. If you have more than $250,000 in cash, they will break that up into portions of 250 and lend that out to other institutions overnight. The reason that's important, all of that cash is insured because they loan it out in those increments of $250,000, which is the insurance limit of the FDIC, the Federal Deposit Insurance Corporation. If you have a more traditional brokerage and you have a larger lump sum in there, it's possible that only 250,000 of that would be insured. So another plus of getting, that nice 3.5–4% currently interest on your free cash that is waiting to be traded. It's fully insured, above 250. So that's in addition to the last video. Let's jump into this video, which is talking about analysts, stock analysts. And look, I think these people do incredible work. They do deep work, and I pay strict attention to what they have to say. They bring great information, but I don't want you to use this as a timing tool. Bad to use as a timing tool, but good to pay attention to. So let's talk about that. The buyers, there's a group of buyers when in the morning you'll see stock upgrades and downgrades from analysts, and you'll see a group of buyers that buy and sell based on that information and using it as a timing tool. So the buyers are following the analysts, but the analysts are following the earnings and the cash flow. Okay, so I want you to be ahead of the analysts and not be one of the buyers following them, following the money. Not good. Let me give you an example. This week, Micron reported earnings. They do high bandwidth memory. They reported a beat on revenue, beat on earnings, and raised their guidance. And they got some upgrades after that. Just to give a little bit of context, the high bandwidth memory it's really cool. Maybe this is the geeky part, but in a nutshell, a computer motherboard used to have a processor with memory laid out around it. Now it's stacked up on top of that processor to make a nice little cube, and the memory can go much faster back and forth with lower latency, and Micron is one of the specialists in this, and this is absolutely necessary for artificial intelligence. And so Micron killed it on earnings this week. They beat on revenue, earnings. They raised their guidance, and after that report, Bank of America gave them an upgrade. So there were some other upgrades as well. Subsequently, as a part of that artificial AI trade, artificial intelligence trade, Jefferies, another analyst firm, gave an upgrade to GE Vernova. GE Vernova is, they do a number of things, but supplying power to data centers. So there is part of it, and that's part of what they do. And so they got an upgrade as well. So let me talk about cutting through all of that. Here is what I'm saying. As far as following the analysts' recommendations, why this is a bad timing tool and why this is the example with Micron is that, let's say that you had bought Micron, you had done your homework and looked at the earnings and cash flow and everything that we've talked about before ahead of times, and you owned Micron going into that earnings report. They reported after the bell, and the stock went up, and it went up into the next morning, and the market opened, and then it trickled down a little bit. It still closed up double digits, but it trickled down. Now, if you had owned Micron going into it, by the end of the following day, 24 hours, you would have been up 10% on your money. Fantastic. Okay, you did your homework ahead of time. But if you followed the analyst into that trade, you would have bought at the after the earnings report, and by the end of that day, you'd be down 5%. So up 10% versus down 5% gives you a nice delta of 15, a nice change of 15%. And so that's just one example about doing your homework ahead of time and being ahead of the analysts who are ahead of that group of buyers. And on that note, I just want to say that, don't the take home is don't chase. We've talked about that before. Don't chase your trades. If it's going away from you, and this is something that over time you'll start to develop, is the feeling like you're reaching for it. You're out there trying to grab it, trying to chase it. It's a feeling, and when I feel that feeling, that is absolutely when I back up and I let it go. And so again, on that theme, don't chase. We've talked about that before. And it's in order to, something that just came to mind. I'm sure that many of you have seen the movie The Matrix with Keanu Reeves, and something that came to mind to sort of give me a picture of this was when they said, follow the white rabbit, Neo, follow the white rabbit. That white rabbit is, and that was a tattoo that led him down to the path of truth, and kept him ahead of the Sentinels. But that's a whole other story. So the point being is that follow the white rabbit means follow the earnings and the cash flow. Earnings and cash flow are king. That's it, guys. We've talked about this before, and we'll talk about it again. And go back in the videos if you haven't seen it. But be ahead of that. Follow the white rabbit. Follow the earnings and the cash flow. Let the analysts catch up to you. Let that group of late buyers follow the analysts, and all of that will benefit you. So there you go. Look, on that note, I just want to add one or two things, and that is that, like I said previously, the work that the analysts do, these people are professionals. They specialize in something like semiconductors and technology, and they do fantastic work. And I absolutely pay attention to what they report. And CNBC, I have said it before that that's one of the many outlets that I follow, and I've got a subscription, a pro subscription. Again, no endorsement, not paid. But if you get the pro subscription, you will get in the morning, every morning, the analysts' significant upgrades and downgrades, and that's the analysts' calls of the day. So absolutely, every morning I read this religiously. I dig down into why it was upgraded and downgraded, and to me, that gives me a good indication of possibility. I don't trade on it, but the possibility of future momentum of the stock, and deep analysis into something that is or may be happening. That gives me a good indication, one indicator of possible momentum, positive and negative, going into the future. So that being said, one other thing is what we've talked about before. Be skeptical, okay? Do yourself a favor. It is healthy, it is good to be skeptical, because it makes you test the analysts. It makes you test market history, and so always be skeptical of that. And most importantly, in my opinion, it makes you test yourself. You have a thesis on a stock like Micron, you love it, and you are always stress testing to make sure that what you have analyzed previously is still holding up, that whether it's a long-term investment for you or a short-term trade, that you are following your strict discipline for when you get in or out, or positive or negative catalysts that, could, make you take action. So test, be skeptical and test. Test the market, test the analysts, test everything that people say about the history of markets, and test yourself and your beliefs. Always be resetting and stress testing. So that's fantastic. And the last thing I want to say is that, as I've said before, and I just want to reiterate, I do not make predictions. Okay. I don't make recommendations for buys and sells, and this is what's going to happen in the future with stocks or with the economy. That is absolutely a disservice to both of us. I don't do it for me. I don't do it for you. There's a cliche, a bird in the hand is worth two in the bush. And cliches, as I get older, I realize that they are cliches because they hold truth, okay? You've got a bird in the hand. Let's just say that that is a profit, okay? You've got that here today based on real price action and research that you've done. You've got that profit. Don't go and chase the two birds in the bush, which are the possibility or the hope of something that may or may not happen. We live in today's market, we trade in today's market, and anyhow, that's the message there. And with that in mind, let's just reiterate, as always, that all content herein and views expressed are informational only and not advice to buy or sell any stock or equity, as you know. I hope this has been helpful, guys and girls. And I look forward to seeing you again next time. And I hope you have a great rest of your day. I thank you as always for watching. I always want to bring you great information, usable information. And I hope this has accomplished that for you. So thank you as always for watching. Take care.